unless you follow these 3 simple tips that me and my mortgage lender are going to give to you guys live. Let's jump right into it today, understanding the importance of interest rates and what they do. Bill, as a longtime lender, Alexandra, as a longtime lender, what is it that interest rates actually do for real estate?
Real estate interest rates can make real estate go up or down. It can go up when interest rates go down, and it can go down when interest rates go up.
100%. It's a juggling act, consistent, right?
Supply and
Alexandra?
demand, basically. It's basically what Bill's saying. Yeah, it definitely drives the flow of traffic. It can make it a buyer's market or a seller's market. So they're very, very important, and it's something that we often don't think about when it comes to real. We just go, oh, okay, whatever, got to get a mortgage. But no, that really does drive what you're doing.
Yes.
I'll give you an example real quick. On a $450,000 mortgage at 7%, the payment is around $2,993.
Yeah.
At 6%, it drops down below $2,600. It's about a $300 a month payment savings. So it brings tons of buyers back into the marketplace.
That's actually one of the things I'm going to follow up on, is because when the rates drop, the prices go up. So you're often not saving as much money on your mortgage as you guys think you do, which is why episodes like this are so important. We want you guys to take advantage of the interest rates while you still can, right? What the interest rates do is control how much money banks can borrow from the Federal Reserve. The lower that number, the more money that they can borrow, and the more money that they can let you borrow at a cheaper rate. Basic to understand. A lot of people don't even know that that's what the interest rate controls, right? The problem is, what happens when you give people more money? I think we just saw it during the whole COVID thing.
They spend it.
When they gave a bunch of people money during COVID, right? And then they spent it. And now we're dealing with the inflation from how much money they were given and spent.
That
okay?
wasn't real money.
It wasn't real money.
Right.
What happens when you take that same inflation and you hyper-focus it on real estate? When the interest rate goes down, banks have more fake money to give out. People don't. If you give somebody $450,000, they're going to try to buy a $475,000 home. Every realtor knows it. Every lender knows it. If you're approved for $500,000, you want a $550,000. You want to spend over your limit, right?
Yeah.
So the interest rates dropping aren't always a 100% pro, and that's what I really want to educate people on today. So, Bill, if the interest rate drops 1% from 7% to 6%, how many new buyers does that put onto the market?
So a drop of 1% nationally, now this is nationally, it is never going to be this many buyers coming in, but potentially from an affordability standpoint, 5 million home buyers.
5 million.
5 million home buyers.
Imagine being in a nightclub. It's ladies' night. Beautiful women everywhere. And there's 100 of them, 20 of you and your friends. And you're looking out and you're like, wow, we spent $50 to get into this nightclub, which was a little pricey, but boy, wasn't it worth it? It's just 20 of us and 100 beautiful women. And then imagine one of your friends says, you know what we should do? We should wait until 5 million guys show up to this nightclub before we talk to girls. That is quite literally what you're doing when you're waiting for the interest rate to drop, right?
Yeah.
You're waiting for more competition to show up so that you cannot pay $50 to get into that nightclub.
And something that the consumer doesn't always see, but there's a lot that has to happen on the back end. It's like when you go to a restaurant, your food just shows up. You don't understand what's been going in on the back end to get your food prepped to show up on your plate. So in order for a mortgage to be processed, in order for a mortgage to go through, there's a lot of different hands it has to touch to go through. And there might be a 90-day lag. If 5 million new home buyers are coming to the market, what about the people that are doing refis?
Yes.
You know, there might be a huge line and they're like, hey, we can't get to you. Sorry, you can't close right now.
100%.
We're here. So you don't always see that. You think, okay, I'm here, I'm ready. Now I'm ready. So obviously you guys are ready for me. It's not always how it works.
Alexandra, it's actually funny that you mentioned refi because that's tip number one. It's not even about buying a home. It's what happens if you're already in a home and you have the option to refinance. Bill, can you explain to the audience what refinancing is, why it's valuable, and just typical costs?
Yeah, so it's valuable because you can lower your mortgage payment from X down to Y. And it's just a matter of trying to figure out does it make sense to refinance? And sometimes, Brandon, it doesn't make sense.
Yeah.
Because there's three things that go into a refinance. Number one is the new rate versus your existing rate.
Yep.
Number two is the cost, which is huge because any lender can actually just say, hey, I can lower your rate by, 1.5%.
Sure.
But there's a cost to all of it. And the third item is basically the payback period.
100%.
And it's all, and so you want to take a look at all three of those things. Sometimes it doesn't make sense. And then other times it's like, oh, this is amazing.
Yeah.
So
Pro tip for those of you who don't actually know the cost of these things, even before you buy a home, 1% of your loan, so 1% of what you borrowed, will lower your mortgage by 0.25%, right? So if you want to lower your mortgage by a 1 full percent, you have to buy your rate down full time, 4 times or 4% of your loan. Do we get similar numbers for refinancing?
there's a lot of online lenders now that are just throwing out these incredible rates, but they hide the cost.
Yeah.
And there's a big cost behind it, but the consumer looks at the payment and goes, wow, my payment's going to be $300, $400 less, but they don't consider the extreme cost. And it could take 5 to 8 years many times to pay back those closing costs
Yeah.
if the right lender is not telling them the truth.
And something to look at too is how long are you going to stay in this home? What are you doing with this home, right? Is this
Yep.
your home? Is this the next 10, 15 years? Then yeah, it probably does make sense. But like you said, what's the payoff period? What's the cost benefit here?
And generally, I would like to see the payback less than 12 months. And if it's under 2 years, depending upon how long they're planning on staying in the home, as Alexander is talking about, that can actually be another good way to do it too.
Yeah, most people need to understand. One of the biggest feedback we get is like, oh, well, it's so much after 30 years that I'm paying. The average person stays in a home for 5 to 8 years. So you put $80,000 into buying your interest rate down. Are you going to make that $80,000 back
Never.
in 5 to 8 years? No.
It just feels good to make the lower payment, but you don't realize that
Yeah. If you're 55, 60 years old, whatever, and you're buying your final home, or if you're someone who's made it wealthy in your 40s and you're buying your final home and you want the payment to be low because you never plan on moving again,
great.
makes sense. But if you're someone buying your first or second home, this is probably not going to be your final home. You're probably going to have 2 to 3, 4 more homes after this, right?
And I would caution too that if they're going to be in the house for a little while, they really need to understand that there could be another refinance opportunity down the road as well. So sometimes you don't want to be out all that money because rates may just drop naturally anyway.
Yep.
And there could be another one. So you really want to try and tie that payback period within 12 to 24 months.
So I think what we're saying here, because I want to make sure that we're not discouraging people from refinancing. I
Yep.
think it's an awesome opportunity. There's been the last couple years, is it 2-3 years where interest rates have gone up and up and up. And lenders have been saying, we've been saying, hey, you can always refi, you can always refi. And
Yeah.
yes, you can always refi. What I think the message here is, the main point here is, you need to sit down with a lender. You need to sit down with Bill. You need to sit down with Brandon, who's a real estate agent. You need to, what am I doing? What's my future here? What is my package? Because what works for you may not be exactly right for your next door neighbor. And I think that's really the important thing
Yeah.
here.
Let's try to give some people something concrete, because it's
Yeah.
one of the most popular questions I get asked on the live is, when should I refinance? And I know it's going to be different for each person because each person is their own special individual. But Bill, let's say I bought within the past year, like we've been telling people to do, and I got in at like a 7.1 or 7.2 interest rate. When would it be viable, or when do you think it would be worth it for me to refinance? What rate am I looking for before I want to call you?
Great question.
Yeah, that is a great question. It's a loaded question because many times it also has to do with how big their loan is.
Yes.
A bigger loan is easier to refinance than
Let's say I bought a $400,000
$400,000
house, FHA. I put down 14 grand. I borrow about $386,000.
So simple math,
Yeah.
right? If you had a $400,000 mortgage, if you save 1%, you're saving about $4,000 a year. And if the cost to refinance is $2,500 roughly, you're going to pay back that within a year. So definitely 1%, and it could potentially be 0.75%.
Okay. So if I bought it in at 7.2, if rates hit 6.2, 6.1, I should be calling you.
Yep.
I should be calling you immediately.
Yes.
Right? Okay.
Yes.
You
Good
should
to know.
have your paperwork ready.
Yeah.
And already have it ready to go.
100%. This is why we tell people to stay financially on top of themselves, what they're spending, what they're budgeting, because you guys, the time to strike when rates are dropping is very thin. And we're going to explain that in part 3, in tip number 3.
One other thing can I point out is that many times people, if they bought and they had a conventional loan or an FHA loan, if the value of their home has gone up, they can potentially remove mortgage insurance or reduce mortgage insurance in addition to lowering their interest rate. So they can save in 2 ways.
Yep. So tip number 2 we have is on the purchasing of property. So you don't own anything yet. You've probably been renting, throwing $20,000, $21,000, $25,000 away per year. And one day you look up and you've taken $100,000 and you've given it to your landlord and you're sick of it. You're ready to buy. But the whole world tells you, no, don't buy. Wait for interest rates to drop, right? And then we play this cycle where in 2021, the rates were 3%, 2.5%, but everyone was like, oh, they're paying $50,000 over the list price. Prices are too high. Then as prices start to go down, people say, no, don't buy now. The interest rate is going up. And you're caught in this cycle of like, okay, well, if I'm not going to buy when the prices are high and I'm not going to buy when the rates are high, when am I supposed to buy? And I think the answer is right now.
Yeah.
The rates are dropping, but the public doesn't know. If you ask the average, ask your dad, your mom, your uncle, your best friend, your college buddies, hey man, what about the interest rates? They'll have no clue that they've dropped almost a full point, right?
There's so much news out there going on right now.
We got chat stuff
Chat?
too, though.
Okay.
You want to answer some chat?
Yeah, what do we got in chat?
So one of you gotta have to repeat the question. I'm not Mike, but why are foreclosures up 41% in Las Vegas?
Why are foreclosures up 41% in Las Vegas? Foreclosures are up in Las Vegas because Las Vegas is a highly investor-owned city. And if investors pull out, then we're stuck with a lot of empty houses, right? But they're always going to get purchased, right? There's never a time where investors aren't looking to purchase in Las Vegas.
Yeah, so this is good news.
And
we
that
have
40
homes on the market.
Yeah. And the 41% could be coming off a super low number of foreclosures.
100%.
So it could seem like a lot from a percentage standpoint,
Sure.
but the actual numbers. may not be.
For example, if these numbers are obviously not accurate, but let's say like there was only 10 foreclosures. Well, if 4 of them jumped up, it's going to look like a high 41%, right?
Yeah.
I cannot stress this enough. Vegas is not really a big foreclosure city because of we're 33 to 35% investor owned. Investors love targeting foreclosures. So that number is not as scary as people may seem, right? It's one of my proofs of how statistics can be completely misleading.
Yes.
Right? Do we have any other questions from the YouTube?
I just purchased a townhome because I was sick of paying rent. Thank Lord. Thank the Lord. When is the best time to refinance? I was thinking of staying in the home for 3 to 5 years.
Bill?
They're asking.
Well, if you just bought it, you were probably near the current market rate. I would, and if you're only going to stay in there 3 to 5 years, you really got to make sure that it makes sense to see the rate drop. But I would say if you can refinance and pay back within 12 months, that's probably not a bad idea.
Yep.
But I don't think they're there yet.
Congratulations, by the way.
Congratulations, by the way, guys.
That's
We love
awesome.
hearing that. So, Bill, what I want to talk about, and it's something I never, ever see realtors talking about. It's one of the things that irks me the most about realtors. The rates start dropping, and every realtor out there is like, yeah, buy a house. Now's the time. Now's the time. If you would allow, there's a statistic, a number, a graph that I use on my TikTok lives to explain to people why the interest rate dropping has massive pros and massive cons, right? I point to 2021 and I say, why didn't you buy when the rates were 3%? And they say, well, prices were going outrageous. I said, good, then you understand how the market works. So you have a $400,000 house at 7% interest. The mortgage comes out to about $29.57. I know because I've done this 100 times on TikTok Live by now, right? Then I tell them, what do you think the cost of this house would be if the rates go down to 5%? I let them guess 410,000, 420,000. I go, oh, no, sweetheart. People wouldn't be making massive amounts of equity if the price only went up by 10 to 20,000. Your $400,000 house is going to cost close to 475, 500,000. That's how it happened in 2021. That's how it happens whenever the market booms, right? What is the cost of a $500,000 house at a 5% interest rate? Everybody thinks that they're going to be saving money on the mortgage. Incorrect. You're actually going to be paying $72 more. It comes out to $3,126. How do I know? Again, I've done this like 95 times already. So not only are you paying $100,000 more for the same house, not only did the person who lives in that house make $100,000 of equity off of you, you're actually paying $72 more on your mortgage. There is a price to the interest rates dropping that no one likes to talk about, but we're going to talk about it here. Bill, why is it that prices shoot up so drastically when the rates come down even 1 to 2%?
Well, it increases the buying power of the buyer. So if the mortgage payment is $200 less than it would be where it is at today, they have at least 30,000, 35,000 more in buying power. So that brings more people. More people can go, oh, it's the same mortgage payment. I can pay $30,000 more.
Yeah.
You just have a lot more people coming into the market doing it.
What do you think, Alexander?
I was just going to say it becomes a seller's market immediately. When interest rates go down, now you no longer have the upper hand when you
Yes.
go in to purchase the home.
Yes.
You may have the best agent working with you, but your agent is only going to be able to do so much because it's now the homeowner that's in charge of your future and buying the home. So that's something to consider as well. If you want to buy a home, you just need to go buy a home. Like stop trying to play this, well, I'm going to wait it out. It's like, no, it's you don't want it to get away from you because there is going to always be there you might have shown up in this wonderful sweet spot. Yay, lucky you.
Yep.
But chances are it's going to be a buyer's market when interest rates go down and you're going to be at the back of the line.
Time on the market is better than trying to time the market.
Yeah.
Let's use the example I just put forward. If you just bit the bullet and bought the $400,000 house when the rates were 7%, congratulations. The rates go down to 5 and you just made $100K. You didn't need
In
to time
equity.
anything. You were already there. Now, there's a few select people who are going to watch this episode right now, right? We've got about 75 people watching live on TikTok, people watching on YouTube, and whoever watches this episode over the next few days. We have helped you guys get ahead of the market. Congratulations. We've helped you time the market. If you buy within, I guess, the next 2, 3, 4 weeks from seeing this episode, you're in that great space where the prices are still low, the rates are dropping, and you're going to get a
Not
deal.
everyone's caught on to it.
Not everybody's caught on to this.
They don't see it. They don't know it.
They don't know it, right? And to me, that's the biggest con, is there's a massive gap in information. So for instance, someone like Warren Buffett at Berkshire Hathaway, he knew the rates were coming down weeks before you did, right? And anybody he shared his information with knew they were coming down. So investors started buying because they're like, oh, here's what's coming. We as the public, we only get what they share to us after, right? We can't inside trade like politicians. I'm not Martha Stewart, right? No one's going to plug me up with the behind the scenes interest rates. I'm not going to know that kind of stuff, right? So we have to deal with the information gap. We have to quit pretending that we know everything just because we read it on a website. If you saw it on a website, rich people knew about it 2 to 3 weeks before that website dropped it, right? You're not getting information before the rich people who spend millions of dollars to get this information, right? And I think that's the gap that we have to try to overcome.
That's where we're at right now.
Yes.
We're in that sweet spot. People
Yes.
don't know about it yet.
We are in a sweet spot. And I think it's a matter of maybe, probably 2 months
Yes.
to where it's going to really change.
Yes.
And I was going to look at it too. Kids are going back to school. So you have a lot of people that are kind of, I'm finishing up my holidays. I'm getting the kids ready for school. They're busy. They're preoccupied. It's not until about September 15th, October 1st, when people are like, okay, what are we going to do? Because we want to get this finalized before the end of the year. So you have a really, a sweet spot to,
Yeah, really
to
short
figure out what
window.
you want to do here.
100%. And as you mentioned earlier, from a realtor's perspective, guys, let's go back to that same nightclub. This might offend some of you, but that's okay. I'm here to educate, and sometimes education's offensive, right? I used to work in nightclubs, and the reason we had ladies' night is because we wanted more girls than guys, so that those girls would look around and be like, "Oh crap, our options are a little more limited. We can't be as standoffish. We got to be a little bit more friendly if we want to find someone to talk to."
Someone
right?
wants to buy our drinks. Yeah.
The second that there's more, the second turns into a sausage fest. There's more guys than girls. What happens? Those girls look around. They go, "Well, there's 10 guys for every one of us.
I'll pick
I'm
you."
gonna wait for the best option." And real estate works the same way. Over the past year, I have been getting any closing costs that I've asked for. Ask Bill. This is my
Yes.
lender. He works with me on
100%.
every file we do. I've been getting any closing cost I wanted. Buyers or sellers have been negotiable because there's no dudes in the club, right? There's no dudes on the club. They have to be negotiable. As rates start to drop and more guys start to enter the nightclub, sellers are like, "I'm not giving you closing costs. Matter of fact, I'm not even going to do repairs on this house. I'm selling it as is. You better buy it and you better waive your appraisal contingent." And then they start doing all these things because they can start making
have the
like,
leverage.
like I said, it becomes a seller's market.
It's no different than being in a nightclub.
Yeah.
It's a sausage fest, and girls are like, "You better buy me a drink before you talk to me." Well, yesterday you let me talk to you for free. Why is the cost of drink now? Well, the market's changed.
Right.
The market's changed, right?
And this goes for resale and this goes for new homes because right now it's been a big new home construction boom, I guess we could say. You know, a lot of new homes, and they're throwing in washer dryers, they're throwing in flooring, they're throwing in all these. That's going to change. You're gonna miss out on that opportunity.
100%. New builds have already started to pull away incentives. New builds have already started to pull away free washers and dryers. New builds have already started to pull away their interest rate incentives. Everything is starting to pull back. In fact, in the neighborhood that I live, houses have gone up 3% already. The same house that was on discount last week for $40,000 under, they now raised the price by 3%.
That's
Already.
good. That's a good thing
Already.
to look at.
So Brandon, obviously, realtor, you've been amazing at helping people and have closed so many transactions. What's the gap, or what time period do people have to really take advantage of? Because it's, again, you can't time the market, but how much longer do people have, do you think?
We made a
Before it
prediction
really
last
goes
year
up.
on this exact show
Yep.
where we said that exactly this would happen. We said, if you bought in late 2023, early 2024, yeah, you would get hit with 7.2% interest. But when the rates started to drop, you would see an equity gain like never before. And I'm going to tell the same people the same thing right now. We're going to stay completely consistent. Okay? You have a stretch right now. People are scared because the stock market has had a big tank and everybody's fearful. You need to strike when everyone's afraid. Again, going back to Warren Buffett, my favorite guy in the whole world. When everyone else is afraid, you need to take chances. And when everyone else is taking chances, you need to be afraid. Right now, let the whole world be afraid of the stock market. Guess what? They're going to start moving their money into safer markets like real estate. We've already seen hedge funds start to do this without all of 2024. A hedge fund in Vegas bought 600 houses in like a 1 month span. Okay,
It's a lot.
it's insane. Dallas, there's this Dallas hedge fund that's been literally buying houses nonstop all of 2024. They see where the transition is going, and I feel the same way. When everyone else is afraid, this is the time to strike. Rates are low, the prices are still competitive, you're still getting deals. I would strike between now and, like you said, before school gets back in season. Between now and September 1st, I would do everything I can to try to get myself in a house, or at least get started on the process of getting myself in a house, right? All right, let's hit them with the final tip, and this is actually one of my favorite ones. When the interest rate goes down, this is a time to invest in rental properties, right? Because obviously you need to cash flow. You need to make some kind of profit off of your rental. And when the rates are high and you're paying $3,000 for a mortgage, it's hard to find someone to pay $3,000 in rental prices, right? So, Bill, how can investors take advantage of this period?
I think, again, the real key is the cash flow and what it's going to be. And with rates coming down a little bit, if they can get the cash flow going right now, then it's a no-brainer. They can go out and do it. And the other thing, too, is that, again, rates could drop further for investors. So it's not just primary residence. It's not
Yeah.
second homes. It's for investors too. So they could potentially refinance as well.
Yeah. For a real life example, I have a Canadian investor named Jason. What up, Jason? We bought a lot of high rises during 2020, 2021 when the rates were stupid low, when prices were stupid low. And he either put like 50% down or paid all cash. I've been talking to him about the rates going down. He follows this very enthusiastically. And so we started listing his high rises because now he's trying to convert the equity he's made into buying more expensive properties when the rates are low so he can make a bigger cash flow, right? So he's like, okay, I made cash flow over the past few years, took advantage of the last low interest rates. Time to cash out that equity that I've made, reinvest into some higher end properties, make a higher cash flow. And he plans on repeating this process until his high rises turn into single family homes. And then his single family homes turn into luxury homes, right? He's willing to play the long
Upgrade.
game here.
Yeah.
He's just upgrading time after time. And I've told this to all my investors, hey, the rates are coming down. Now's the time. Let's make a push. Let's make a push. Let's make a push, you know? And everybody, when people talk about rates coming down, they really focus on the retail market, the single family buyer. And it's great for them, but it's also great for people looking to make a profit.
Yeah, you definitely have more competition out there. Again, like you said, we think it's the single family. We think it's the family that's either moving up or moving down
Yeah.
or whatever. It's, oh, I need to buy my primary residence. There's a lot of competition out there with investment properties. And something to also realize is that if you are a renter right now, you can expect that your rent's going to go up.
Oh, talk to him. Talk to him. Oh, I've been waiting. See, that was actually my big surprise of the
I
thing.
blew it.
No. I'm glad. Renters are gonna get every time I do a podcast episode,
Yeah.
we're gonna tell renters the truth. We're gonna hurt their feelings.
Yeah, it's going to go up. And you know who's going to win is your landlord. Your landlord's going to laugh all the way to the bank. Your friend like Jason here is
Yep.
going to go, here we are. You know,
Yep.
this is what I've been banking on.
Yep. Let's say your landlord, and you guys got to know this because your rent is based on average median income. Your rent is based on the cost of mortgages around you. You guys need to understand this kind of stuff. That's why when the price of homes go up, the price of renting goes up, right? So let's say your landlord bought his property in 2023. He put 20% down, 30% down when the rate was 7.2. What do you think he's going to do when the interest rate goes down to 6?
He's going to refinance and he's going to at least charge you what he's charging you now or more for it. And he makes a big raise.
Your landlord was paying $3,000, right? Well, no, he's a landlord. He put 20% down. Your landlord was paying $2,400 at 7.2% interest rate, right? Now he's going to refinance at 6% interest. He's going to be paying $2,000. And you think, oh, well, he's paying $400 less dollars. Maybe he'll charge me. No.
He's going to take that.
What's he going to do, Alex?
Jason's going to take that. No, he's going to raise the rent. He or she's going to raise the rent.
He's going to increase his, he's going to do what a good business does
course.
and increase his cash flow. Congratulations. I just lowered my mortgage by $400. I'm raising your rent by $150. I just made an additional $550 per month or an additional $6,000 per year. Good for me.
Yes.
Yep. That's how it works.
That's how it works.
That's the benefit of being an investor.
100%.
That's why you want to do it.
It's my peasant versus the Lord theory. It is. And we're going to do a whole episode on this, on the peasant versus the Lord. The Lord always wins because the Lord gets to dictate what the costs are. The peasant has to accept it.
Yep. You're
Right?
going to eat porridge. That's it.
Yeah.
That's what we're
Renters,
having.
you think the interest rate fluctuation doesn't mean anything to you. I'm renting. What does it matter? Oh, it matters. If these rates keep going down, renters, I promise you, you can quote me on this. Matter of fact, we'll make another TikTok video with a guarantee, Charles Barkley style, your rent is going to go up. If the rates go below 6%, your rent is going to go up. How do I know? Because I know your landlord and he can't wait to take more of your money. I guarantee it.
And this doesn't matter if you're renting a single family residence from an individual or you're renting from a major complex. They are going to raise your rent. Your rent.
Does not matter.
And there's so few people that have a landlord that just doesn't raise the rent.
Yep.
And that's few and far between.
Yep.
And a lot of those landlords may have had those properties for years and they may need to get out of them.
Yep.
And eventually they get out of them, they sell it.
Yep.
So that person's going to have to move or they're going to get hit with a big
100%.
adjustment.
You think you're safe in your apartment complex? Hey, buddy, The people who own your apartment complex took out a fat loan to get that apartment complex. Okay. They have debts to pay as well. And guess what? When the rates come down, boy, they can't wait to raise your rent.
Yeah.
Straight up. If they got to pay to refinance, you're going to pay for it as the renter. And you think, that's not fair. You're right. It's not fair that someone else has to provide housing for you.
All in all, though,
That's
Brandon,
good.
we want to get people in homes. And that's where we want to educate them and so that they understand where they're at and how they can actually become a homeowner.
Yes, but I have to hurt renters' feelings, so I motivate them into becoming a homeowner. They know they need to be homeowners.
Right.
If you're watching this, I'm not telling you something you don't know. You know you need to own a home. I'm not. You didn't wake up today like, wow, I got to own a home and quit renting. You knew. I just have to hurt your feelings so you make that big leap, right?
Yes.
So, Bill, what are some practical advices or some pitfalls you can give to the people to help them in these tumultuous times when the stock market's kind of fluctuating and interest rates are dropping and people aren't sure where to go?
Well, a lot of people are just fearful when they're afraid. They don't do anything.
Yes.
And so right now there's a lot of paralysis out there.
Yeah.
And I think people are like going, oh gosh, is the economy good or bad? Or, you know, are interest rates going to fall more or less? And so really in my opinion, I call it a calculated risk. You have to take the information that you're receiving from guys like Brandon, Alexandra, myself, and then decide, does it make sense to do something? And like real estate is time. Your real estate is not as of today. And that's what so many people look at is they're very myopic and they look at today. But real estate for most people is 7 to 10 years.
Yes.
So even if you're a little bit off on something, you didn't get the lowest rate or you didn't get the lowest price, long term, the benefit's going to be huge.
You're going to come out ahead.
You can come on ahead.
You just have to make that risk and jump in.
So to summarize the 3 tips for today. 1, strike while the iron's hot. Don't wait for more guys to hit the nightclub before you talk to girls. The rates are dropping. Be proactive. Get onto it. 2, now might be the time to refinance. If the rates have dropped a point lower or 0.75 lower than what you bought, call your lender. It's free. Bill will give you the numbers for free. Don't matter what state you in. Call. Bill, what would it cost me to refinance? Do you think it's worth it? That's a free call, Bill.
Yeah.
That's a free call.
Very simple.
And number 3, this may be the time for you to jump into the investment market. With rates going down and rents rising, this is definitely a time for you to try to make some cash flow, get started on your investment career. If you need any help, especially in Vegas, you guys can always reach out to me. You know I got you as on that, right? What I want to encourage people to do, just be proactive. Calling me, $0. Calling Bill, $0. Calling Alexandra, $0. It's free 99, right? All you have to do is care enough to try. We care enough to sit here and try to teach you guys week after week, podcast after podcast. So make sure you guys subscribe. If you have any questions on what we've talked about today, make sure you leave a comment below. We can't wait. And if you guys have anything that you guys would like us to talk about in the future, again, leave it below. We're open to any single topic involving real estate. We'd love your guys' feedback. Thank you guys for tuning in. Bill, where can they find you?
They can find me at billgaylord.com or at ooh.gaylord.
Oh, Gaylord. Alexandra, where can they
You
find
can find
you?
me at Alexandra Harbushka on the gram.
And I'm Brandon from Vegas. You can find me here on the YouTube, or just go to Google, type in Brandon from Vegas, and you'll see all the hate comments about me. It's incredibly exciting. It's thrilling. It's engaging. No, you can catch me on Instagram, TikTok, YouTube, Facebook, LinkedIn, blah, 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 all the crap. You guys make sure you like, share, subscribe, all the fun stuff. Thank you guys for your time. Peace. Peace, 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 peace. Bye.